everyone, and happy Sunday. This is Simon again with AvaTrade, and welcome to our weekly webinar. And special welcome, of course, to new people. And for those of you that are here for the first time, just 2 words of what we're doing here. And as I always say, and excuse me for repeating myself again and again, but the title says it all. And the idea is really to sit down before the week starts and make a plan. And they proved that in every aspect of life, planning it's not a bad thing, to say the least. So it gives us a little structure. It gives us a plan, algorithm, or directions, or whatever you want to call it, that will bring more order and less chaos to our trading. Few words about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. My total experience is more than 22 years now. I started as a licensed proprietary trader back in New York City. I worked in a few proprietary firms for about 11 years, and then I started to mentor and educate traders. And currently, I'm working with customers here with AvaTrade, trying to improve the trading, maybe as far as it is allowed, by sharing some of my experiences. And this is the regular agenda of the webinar. We'll be talking about indices, stocks, commodities, and FX world. Now, these are the channels that you can follow up with us. Of course, there's Telegram, popular Twitter, and my favorite YouTube channel. Most of you are watching this on YouTube channel. So very important that try to subscribe to it and also put that bell on so you will be notified when new things are happening. And of course, do not hesitate to share it with your friends, other people that might be benefiting from this if you feel that this is something that benefits you. Now, a risk warning, very important to understand, and you can find the full document at avatrade.com. And the idea is really that we're not suggesting anything, as you know. This is purely educational, so please feel free to look at the document. Now, I brought this picture, and again, as we know, we've been talking about it for weeks. There's a lot of panic on the market, and this title, I found it really panicky as well. I don't know if you remember what happened to Enron, where a lot of people lost their pension funds and everything else. You can Google it and research it. But they say that there's a article. I'm not going to go into it. I just thought that there was a strong title here. You can find this article on marketwatch.com and read it. It's very interesting information there with statistics and everything else. So we'll start with big picture, as I usually do, and let's just try to see what's happening in general in the world, in the financial world. So few major events happened last week, and of course we're starting this week with the effects of it. There's new developments with the war with Russia and Ukraine, and Russia actually got some guts to do what they did. They signed the papers, which nobody accepts in the world. They pretty much took 4 regions and said that now it's Russia, and they signed the papers publicly and even created this huge celebration in Moscow because of it. So there were strong reactions all over the world, especially from Ukraine. And President Zelensky, he announced that they actually applying for becoming and to entering the NATO, and that's also a big thing. Now there's a big support and probably more efforts that the West is going to do to supply Ukraine with more weapons and so on. So it's going to be interesting this week. We'll have new things coming in. Now, first thing comes to my mind, of course, that oil and natural gas, that it's been super sensitive subject with the war, and as you know, went up and down, now sitting in a tight ranges. So we'll see those two being affected. We'll be looking at the charts in the moment. Now, what happened in general? Now, this week we'll be also looking at the moment at the economic calendar. But this week, the key event is the NFPs. As we know, it's the first Friday of the month. That's the non-farm payroll from the states, and the unemployment levels. We'll be looking at it on Friday, which is one of the important things that the Feds are looking into in their decisions in monetary policies and interest rate decisions and so on. So that's happening on Friday. So let's move to economic calendar. Now, again, for new people that watching this for the first time, economic calendar, it's an important thing. Should you follow it? Should you? It's totally up to you. But in my opinion, and other traders out there, it's important to know that these announcements or events or numbers are coming out on certain days and certain times. What I do here, I just take the high impact events, and the times are in GMT. You can find there's a lot of sources. We have it on our web trader and on the app as well. You can enter there. You can use other institutions that are providing economic calendar. So here, why is it important? Before I go further, you want to know that certain things are happening. We can't really know, and I always say it, even if you knew exactly what the number will be at the time of the announcement, if you knew it ahead of time, you can't really know how the market will be reacting to it, because it's all crowded, it's all other things that are influencing things. Sometimes, speaking in Carl language, the white is not always white and the black is not always black. So it's very hard to predict how things are going to be playing, even if you knew the exact number. So these are the high impact events that I chose for this week. That's we have manufacturing index on Sunday from Japan, manufacturing PMI on Monday from US, very important interest rate decisions from both New Zealand and Australia, and we'll be talking about it separately. I just want to give you a little bit of heads up. These were the weakest currencies in the past week. We'll be looking at them at the moment. We have ADP numbers, which is kind of a pre-NFP numbers by different agency. They're showing, just to give you an idea, here, so you can see the ADP predicting 200,000 jobs added, non-farm payroll predicting 250,000. So they're close, but sometimes they're not so much close. So just an idea kind of what the NFP could be. We have service PMIs, excuse me, on Wednesday. We have trade balances from Australia, retail sales from European Union, Bank of Canada governor speaking on Thursday, another currency that suffered a lot. That's Canadian dollar. We'll be looking at it as well. Friday, retail sales, and the key event is the non-farm payroll. And we have the employment, unemployment data from Canada. Sometimes they come together with NFPs from the state. So these are the things that are happening this week. And again, non-farm payroll, very important. Interest rate decision for both Australia and New Zealand, also very important. Let's move now to the trading terminal. This is the MT4. And let's just think, what happened. And of course, the equity market is the biggest focus. And as we've been speaking for the past few weeks, more than a few weeks, there's a downside pressure in the market. And if you remember, we spoke about it, that we still didn't see the strong capitulation on the market, because some analysts were saying maybe it's time to buy, others said not, and a lot of opinions were exactly what I share with you, that we need to see that strong capitulation, that people are running out of stocks and don't want to buy or just want to be out of it. And that could be signaling that we're getting close to the bottom. As of now, the downside pressure continues. And the analyst saying, if you remember, I shared with you a few weeks ago, the September is statistically is a down month for the market. And this September has been terrible. Okay. And I found this statistics here. The S&Ps were down 9.34%. Dow Jones was down 8.84%, and Nasdaq was down 10.5%, which is the worst September performance since 2008, which, as you know, was a terrible year. There was, you can call it a global financial collapse. So nothing new. We're still continuing lower. Now this week, if you look at this week, we finally broke through the June's lows, and that also the low of the beginning of the year. And as I give you the numbers for this month of September, you just finished, the indices were performing terribly to the downside. So that's S&P 500, as you could see, which just broke through June's low. This is weekly chart. So daily chart right here. This is the first closing since the June's low. Now, few scenarios, and of course, yes, I don't want to be looking like a genius here, but it's very simple. We can just continue straight down, which is also a scenario, and maybe we'll see that capitulation or really panic selling on the market. Also possible. Now, if you remember, I showed you this trend line where we had a weekly chart and there was a third touch here to the trend line. Now, logically, we could be going lower until we touch this bottom. You know, it's very simple. You just connect one low, the second low for which we bounce. So at some point, we'll be touching it possibly. The same thing to the upside. That's why this was a very nice play and it worked perfectly. It's a textbook trading scenario with the trend lines. Now, again, one scenario we can just go straight at some point hitting this trend line. Another scenario, which is also possible, and as I share with you sometimes, at this point, this line here around 36.48 was a support. So when the instrument moving and breaking down through the support line, a lot of times it bounces back to retest it and establish a resistance. That's what's happening. It's in a simple language that I use when I talk to traders. It's the floor and the ceiling. The moment you break through the floor, that floor becomes the ceiling of the lower floor, and so on. So at this point, we need to really hit the head back against the ceiling and to say, okay, maybe it becomes a resistance here, and then we continue lower. That's normally what's happening. Now, of course, there's other scenario we can just break through it to the upside and start really building a new support. And this breakdown would be a fake one, okay, or false breakdown. And then we can bounce from here as well. But if you take into consideration the general conditions and mood on the market, the scenario of continuation, either straight down or retesting the support and establishing the resistance, is more likely. Fundamentally, again, there's a lot of chaos with the war. There's a very strong pressure on the Feds to continue aggressively increasing the rates and doing other things to bring the inflation down. They don't really care what's happening at this point. This is the only goal, to bring that inflation to normal conditions, and they're trying to reach 2%. So if you put all those things together, there's a big chance of continuation to the downside. Now, let's move to Nasdaq. Similar story. Here we actually, let me see, the low of June, 11,068, and the close Yes, we did close below it. And as you could see on the weekly chart, we're really starting to play with the 200 moving average on the weekly chart. As you could see here on S&Ps, we didn't reach it yet. And the Dow Jones, we are way below that 200 moving average. So we established that US equities are continuing lower. Now, DAX, it's been below the June's low and it just continues falling. And FTSE is a very interesting story. As you could see, or maybe you heard the news, there's a lot of issues economically, and it becomes political issues in UK. And in the past week, the Bank of England, they took some measures of intervention, and they purchasing certain instruments to bring more stability to the economy. It reminds me of something that would happen that happened in the U.S. in 2008 when the Feds were doing this quantitative easing program, and I think UK is trying to do similar thing, and it actually helped, but the index didn't really recover, but it helped to stabilize a little bit. I'm gonna jump a little bit ahead of myself. It helped recovering the British pound, which reached, I think, the 37-year low. So it was a little bit of a move to the upside on that effort to stabilizing the economy. Okay, let's continue. We'll look at the pound in a moment. So the FTSE, UK FTSE is also experiencing a lot of pressure to the downside. All the indices pretty much the same thing. You can say that they are in a free fall in a way. Now, Nikkei as well, even though if you remember a few weeks back we spoke about it, that it's the strongest economy at the moment, but with the pressure of a global slowdown, all the indices pretty much falling. Even this guy right here, the Nifty 50, the one that we're not really taking seriously in a way, lately it's been really, really selling. And this is a 3 straight weeks to the downside. We just closed last week below the 50-week moving average, which potentially could mean that we might continue to the downside. Okay. And Italy, there were changes in politics there, and new people came to power. I'm not big in politics. I'm not going to pretend that I understand what's happening there. But the market is reacting in the same way as all the world indices. It's been selling, and it looks like we are approaching this July level in this case on 20,080. We did touch, actually broke below it, but closed a little bit higher. So as you could see, most of the indices are looking down and possibly will continue in this week. And again, as I mentioned to you, sometimes if you take one of the strategies that traders are using, that's a Thursday, Friday rule. You can Google it. There's one of the strategies that if Friday closed below Thursday, that potentially Monday will continue to the same direction. So in this case, we might see continuation to the downside, which is also logical. But again, remember that nothing is for granted. We could be easily having a reversal, something they call a bear market rally, like we did here, like we tried to do here. Anything could happen. But as you could see, every attempt to go higher, let's take the 4-hour chart on S&Ps, every attempt to go higher continues with the lower low. The same thing here, the same thing here, and the panic selling kind of prevails in the current trading situations. Okay, let's move to stocks, and I have a few prepared for you. And with the market going lower, I mentioned to you last week, Twitter is really remaining strong ahead of the trial that starts in October. And again, it looks like they're really hopeful that they're going to win. Because as you know, the $44 billion takeover plan by Tesla would mean that the investors would get $54 per share, which even at these levels, it's a nice premium to the current prices. So I guess they're hopeful to win. When the market is going down, Twitter is going against the trend. So that's a strong sign. Again, to remind you, I think October 17, the trial, the 5-day trial is set up to start. Now, Apple. As I mentioned you last week, Apple and Tesla, they mentioning a lot of positive things, that these were the two stocks that have ability to bring some profits to the investors. Now, Apple has been selling the moment we broke through 150. There was a slowdown. If you read about it, if you heard about it, there's a slowdown in sales of the new iPhone, and that didn't look good. And now this week there was some development in the management. There's one of the executives, Tony Blevins, is leaving the company. He had some issues filming some TikTok videos where his speech was not so appropriate, I guess, and the management didn't like it. So I don't know if it's his decision or he was pushed to leave. And he plays a big role in the company. He's responsible for being in touch with suppliers and so on. So I think it's a hit for the company, but in today's world, I guess they need to act just to remove any negative publicity from the company. Again, you can read about it. Apple has been weak and it's just falling since that slowdown announcement. And I guess this event with one of the executives leaving is going to put more pressure as well. And if you look at the weekly chart, we come again to very serious. And if you look, most of the stocks are at the very serious levels that if they break against support, becomes a resistance and might continue to the lower levels. If you see on the weekly chart, this past week we just broke to 100 moving average on the weekly chart, and we might continue lower here. Nike stock had terrible news, and the stock just went down, just gapped and went pretty much flat for that day, about 12.8% lower than the day before. So that's something to look into it. Now on the weekly chart, again, we're way below all the averages. We could stop around here. We can go and retest the start of the pandemic levels, where Nike was at about $63. That's a long way to go. Now, Teva, I've been talking to you about Teva for a couple of weeks now. As you could see, Friday, the stock moved higher, and I was doing a little bit of research trying to find out. And I think CEO was interviewed, and he said that they entering the cannabis business, something to do with oils and cannabis product in medicine. So maybe that was the push. But in general, if you remember the whole story, that the stock was strong, that was upgraded to $13 per share, continued higher from $9.50, $10, and then it just went down to almost closing that gap. And Friday on the falling market, the stock was high. So maybe this will start a little bit of recovery. How far will it go? We can go to maybe this level here, from which we had a hard time to go higher over here and here as well. So around between $9 to $9.50 possible, which is also percentage-wise could be a good move. And again, we can go down and actually close that gap and see where the real buyers are. But there's some positive things for the stock. So potentially it could move, but because it's the same way as Twitter on the falling market has been really going against the trend. Now Boeing also falling, and we are approaching this level of June. Most of the stocks are doing the same thing, and that's going to be critical. We'll be holding the June, and both, of course, indices are the same idea, or we're going to continue lower here. Netflix had some positive publicity. they expecting to kick in that business model with advertisement in early 2023. So it looks like it is holding here. It's been the last quarter has been up 30-something%. Of course, it was heavily sold and then recovered a little bit. So again, a lot of analysts are, some of them even putting, I don't remember which bank was it, but they're putting a target of $280 or $285 per share on Netflix. There's a big hope that that new model with charging for different plans and making money on advertisement will add to the bottom line of the company. So we'll be watching Netflix. So far, it's been holding that. Now, Tesla again. Tesla is holding this low level of current support since the split of the shares. The low here was 265. Let's see over here, 265.5, and we closed a little bit below it. So that's very interesting area. And again, as Twitter is going higher, I just my thinking. Don't take it, of course, seriously, but just what I'm thinking, that if Twitter is so excited and the price, the stock price reflecting it, and they're expecting that deal to go through, Tesla in the current economic condition to spend $44 billion now on that takeover, they shouldn't be really a happy camper here, considering the general situation on the market. So maybe the investors are really leaving or selling the shares because it's been really weak, but it's still holding this current level, so it didn't really have any panic sell-off. So it's going to be very crucial whether we're going to hold these current lows or break through them. So Tesla, and of course we'll have a better idea the moment that trial starts. That's it pretty much with the stocks. I'm not going to go through all of them because there's no reason. They're all pretty much selling off, and watching the S&P 500 just give you a general idea of what we are. Just to wrap it up with the equity markets, as you could see, we just broke the June's low, and the stocks, of course, a similar idea. Some of them already lower, some of them fighting this level or approaching it. So we are at the very serious strategic levels here. That could trigger really that panic sell-off, or we might find some support. So let's move to commodities, and we'll start with the ones that we mentioned that connected directly to what's happening between Russia and Ukraine. As you could see, oil recently was selling with the threat of a lower demand. Then we bounced back to 81.5, and that's kind of a key level that I mentioned to you based on this a long bar on the September 7th. So this bar established the level. As you could see, we touched the same way over here. We just broke through it, came back, and as I mentioned to you before, at some point support becomes a resistance. So it was a support, double checked, we broke through it, came back to establish the resistance, and most likely or strong scenario that we're going to go, and now we have to retest the recent low. If we break through it, we might go lower. And on the weekly chart, also the series level here, we're sitting on a 100 moving average on the weekly chart. So again, we might be hitting the 81.5 again, bouncing our head against it, and then we might go and retest this recent low of 76.26. And if we do break that, we might have a continuation to, of course, 70 psychological level, maybe even 65. Again, this is technically, but it's all fundamental. Today, we don't really know what's going to happen. And there's also a threat. A lot of political analysts and war analysts or military analysts are saying there's a threat of a nuclear bomb used by Russia, and NATO responding to it. So it's going to be an interesting week. We will hear from more about the war, and of course, oil and natural gas will be reacting. Now, the same thing here. We had the strong move on natural gas, and then the past 1, 2, 3, 4, 5 weeks we were selling on the same level on the threat of economic slowdown. And again, you would think after the explosion with the Nord Stream and the gas not going to Europe at all now, I believe the natural gas would react. It doesn't. So I guess the fear of the low demand overpowers the fear of low supply at this moment, if you understand what I mean. So again, here, if you look at the weekly chart, we're kind of in the air. There's no levels here, so we might go lower to around 620 here, 618, 620, and then would hit 50-week moving average, and then we'll be retesting that level. Or we can just jump. We can have some development, shortage of natural gas, or whatever it is. Whoever overpowers, it's either the low demand or low supply. Currently, the threat of low demand is winning. As you could see, the instrument is selling. Now, gold had a green week as the US dollar weakened a little bit on these 2 days, as you could see. We'll take a look at the US dollar in a moment. And also yields on the 10-year bonds also dropped a little bit in the value after having this robust move to the upside, hitting 4%. So gold had a little bit of a move, and again, we're sitting at these levels around 1661. If you can draw the line by this large bar over here, or candle, and let's see what's next. We can establish a support here, or we can establish a new resistance and continue lower at this point. This week we'll see. Now silver on the other end, and I think I mentioned one of the weeks, it's acting stronger than gold. It hasn't reached the level of beginning of September. It's been holding here without retesting it. So there's a possibility that buyers are there. They're not really letting it fall as they did in gold case. So we'll be watching that. We are below all the moving average. We tried to play with it, as you could see. On Friday, we had the 50 moving average, but then we went lower. So it's going to be probably another attempt, maybe establish support above the 50 moving average. Copper has been weak as the slowdown, the global slowdown is happening in China, of course. And just to remind new people that China is something that affects copper in a strong way. So when there's a slowdown, which currently is economically in China, and the sell-off on copper and vice versa. As you could see, there's a long way that copper was selling here, starting June when the market had a sell-off, but it never had that serious move of recovery to the upside. And then finally, when we hit below the 200-week moving average, we had a little bit of a move to give a little bit of hope to the buyers. We hit the 370, a little fake breakout, and we're back to 330 last week and closed a little bit higher. So again, we'll be watching what's happening in global indices, and especially China, which I forgot to show it. I apologize. This is China right here. You see, we had a nice move higher, and then we peaked at the end of June, and then we continue slowly bleeding lower, had a little bit of a bounce, and as you could see, it's clearly we have lower highs and lower lows, and it is continues. So this week, this is the daily chart. This week, there's a possibility that we'll, let's take a look on the weekly chart. It's going to be clear. This week, we're going to retest the previous week's low, and if we do break that, we might continue lower. And of course, the elections is happening, I think, soon in China, which is very serious politically, economically. I think it's the mid-October, schedule for mid-October. So again, Chinese economy doesn't look that great, that's to say the least. And they have issues, just to remind you, we spoke about it. They have issues with real estate, financial issues. They had to lower interest rate a few times. And of course, they had a lot of lockdowns due to COVID and so on. So not a happy camper, China, these days. Let's finish with commodities. Go back to soft commodities, and let's take a look at wheat. Wheat finally hit our target. You remember, if you participate weekly, you understand what I'm talking about. If not, I'll just remind everyone that we were building up a nice accumulation here. This is important to understand just for the future. Sometimes the patterns repeat themselves. As you could see here, was a lot of accumulation that was shoot up. Of course, the war played a big role here, okay? Now, what I mentioned to you that we have similar to the right, on the right side, there was a big accumulation here with the freight breakout or breakdown, and then we broke through it. Just zoom. Then we broke and we established support again about 800. Then we just went in steps. We had another resistance around 846. Then we had another accumulation here. We broke higher, established support. The fake breakout or breakdown in this moment was a nice opportunity, and the buyers just came in. And we mentioned that 9:30 is the next checkpoint, and we did touch it on Friday. Now, what's next? Few scenarios as usual. We can establish that this is a new resistance, and then we might be going from top to bottom, similar to this channel or this channel. And at the low or the bottom of this new channel that we, let's call it between 850 and 930, or 846 and 930 to be precise, the buyers will be trying to buy it around here, and then we'll go and retest the highs again. That's one of the scenarios. It's going to be another level of accumulation before going higher. Now, another one, we could have closing about the 930, and then building a price action of opening and closing, or at least for at least a few days, and that would mean what I mentioned to you, but it just in the opposite direction, that the resistance will become a support, and then we'll be ready for the next leg up. Okay, so we are, it's pretty nice. Again, just when you have a plan, there wasn't a one-day scenario, right? But if you see, and if you make a decision, something that makes sense, if you calculate your risk, and you know your approximate target, trading becomes a lot of fun. So this is wheat. Soybeans, it's been selling here, and we came to, it's been very choppy, you could say that, so hard to say, but I draw again a magic line, the trend line, which is nothing magical about it, just connected the beginning of the move and then where the retracement stopped, and we actually are on the way maybe to touch this line, and whenever we do touch it, we might see a reversal here. So something again to watch. We might turn around and not touch it, but there's a possibility that we will. So again, maybe in sympathy to wheat, at some point we're going to have a reversal and continuation to the upside. The thing is that soybeans never had this strong sell-off as the wheat did. And so that's the soft commodities for you. And again, I forgot something very, very important. I apologize. If you remember last week at the end, without even showing it to you, I mentioned the banks. Very important. I almost forgot it again. So let's go back to equities for a moment. The banks are suffering a lot. Okay, and I mentioned to you at the end of last session that there's a lot of pressure, a lot of debt is being built up by consumers by not being able to pay the credit card balances and other things. Mortgage rates are high. There's a slowdown in buying new houses and existing houses. So this is Goldman Sachs. It looks a little bit stronger. So it's really a big institution. But if you take a look at JP Morgan, it's been really, really selling. Citibank has been really, really selling. And Bank of America is actually approaching this June's low. That this is July. Okay. So on the weekly chart, take a look. Bank of America is approaching that double bottom 1 and 2, and we might even break it here, or we establish a support. So it's very interesting. We're approaching that level. Citibank, we're also approaching this support over here from which we started this robust move, and that was back in November of 2020, just to give you an extent of sell-off. And JP Morgan is closing this gap that happened back in November as well. So very serious levels on those banks. And if you could see, 3 straight weeks with the gaps to the downside. Again, important that I mentioned that to you. So we finished with commodities here. Let's take a look at Forex. We'll start as usual with dollar index. Dollar index had a super strong week the week before. This week actually was a red week. That means a sell-off. There was a sell-off on Wednesday and Thursday. And now we could be actually continuing to the downside. Friday was a green day, but not such a strong, exciting to the upside. And we might actually go and touch the same scenarios I mentioned to you at the bottom of the channel, which would be okay, because take a look at this parabolic move to the upside. That's normal if we have a nice correction before continuing higher. So that's US dollar. And of course, as I mentioned to you, gold reacted to it on the same 2 days, the gold was green. So on the specific pairs, I just went through all of them, and the weakest one, even on the weak dollar, the New Zealand dollar and Australian dollar sold. Take a look. On Friday, they just given the previous 2 days of advance to the upside, and New Zealand dollar, the same thing. Now, New Zealand dollar here doesn't look that serious, but take a look over here. We did come to a very, very serious level. That's what I mentioned to you in the beginning. There were both Australian dollar and New Zealand dollar. We might see some changes upcoming week as interest rate decision is coming up. So we came to the level of pandemic lows almost on the closing. We went lower, but we didn't close. We never closed. But this was the beginning of a reversal the following week, and the low here was 0.5594. We are right at that level. We broke below it, and we closed. Isn't that funny? And that's, I'm always a big advocate of levels. Again, I'm not trying to convince anybody, but it's kind of funny. Take a look. Low here, 0.5594. Close here, 0.5594 to the penny. Now, there's a huge time distance between these two levels. And how somehow mysteriously, quote unquote, we did close on the same exact level, just to show you the importance of knowing and having your levels. Okay, and take a look on the daily chart or hourly chart. We did go below it. It looks like there was a temporary accumulation and we went back above that, and there was on 28, and then we came back to retest it, close below that level, and that's very interesting. Okay, so New Zealand and Australian dollar, sorry for deviating a little bit, they were the weakest, and the strongest were euro and pound, and no wonders, of course, they've been killed in the past weeks. Now, euro had a nice 2-day move to the upside, and it actually held on Friday a little bit in the red territory, and pound Friday closed pretty much flat, open and close 1157, only 15 pips lower from the opening. So they were really strong on Friday. As I said, the Bank of England takes drastic measurements or measures to improve things. So pound had a really nice move. Again, it's been sold with panic, I would say. Now, if you take USD JPY, it's been sitting at these levels. Really, something's happening here. There's a lot of accumulation. Having a hard time breaking through it. Take a look with all the spikes. And the previous week was a big spike with the intervention of the Bank of Japan, as we mentioned. It has a hard time to go higher. So, and again, you probably heard me saying it, the longer it has a hard time to go higher, at some point, the buyers, logically, they'll lose their patience and they turn into sellers, and we might see the move to the downside. But on the opposite note, on the weak dollar, the dollar didn't really sell against the yen. It's been really holding, pushing. So we at this point, we will see the impulse, and it looks like it's going to be a strong impulse. It could be to the upside, it could be to the downside, but the strong build up at the same levels, as you could see. Take a look. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 attempts within the past 2-3 weeks to break to that level. We're having a hard time doing so. So again, it's like a spring. The longer you hold it and the harder you push, it's going to have a strong move. It could go either direction. So that's on yen. Now, and the specific pairs that were super, super strong because they're the opposite, like I mentioned to you, that the euro and the pound were the strongest, and the Australian dollar and New Zealand dollar were the weakest. So if you mix those, you will see a very nice picture. You ready for that? Here you go. This is euro Australian dollar. Take a look at this robust move. And we are approaching the series levels. And take a look over here. This was the recent, this is weekly, you know, on daily it looks a little bit more serious here. So this was before the fall. We are approaching that level around 153.11 closed. And we might see reversal or continuation. And there's a big question: will the Australian bank increase the interest rate? And if they will, they could have a nice retracement to the downside. And if not, hard to say. Maybe it's already priced in or whatever it is. But in any event, these moves you want to be really, really watching, because the extended move like that, especially when they reach certain levels of, in this case, resistance, and it came to it very fast, the reversal has a big chance of taking place. And the other one is even stronger here, USD NZD, similar idea. Take a look, we even broke to this level here of the recent resistance. We close higher. And again, decision of New Zealand on interest rate could also either extend it higher or create a reversal. And the same thing on pound. Pound has a super strong move here, and take a look where we stopped. We stopped at the previous resistance. After the resistance, we had the sell-off, so we came right to that point. Again, there's a chance of reversal from these levels here, the current level where we closed. Again, it will depend a lot on what's happening as far as the interest rate. So this is GBP Aussie and GBP Kiwi, super, super strong. And here, of course, we approaching these levels of a lot of actions here. This is the weekly chart. So on the daily, it's already in the skies. So weekly chart, we are approaching a highly congested area here. So something to pay attention, okay? And I'm glad I give you these 4 pairs to look into. Again, nobody can tell you what to do. It's up to you. But the moves were super, super strong, and we are approaching serious levels on these pairs. Again, why I chose this pair is important. It's all about the relative strength. The euro and the pound were the strongest against the US dollar, and the Aussie and New Zealand were the weakest. So if you combine them both, you'll see a strong, powerful moves over here. And before we go, before we leave, let's take a look at cryptos. And it's clearly we're trading between 18 and 20,000. And I think last week I mentioned something when the market selling off and the Bitcoin didn't really touch 18. And I said there's a possibility of it touching 20,000 again. It did briefly a few times, but it didn't really stick. So we are right in between 18 and 20,000. Again, Bitcoin is really sitting here trying to think what's next. And lately it's been really reacting negatively on the sell-off in the market and the strength of the dollar. And here on Thursday, US dollar was strong and Bitcoin tried to move to the upside here. Let's zoom in a little bit. It tried to move higher, actually crossed the 20,000 for a moment, and then it came back again. So not enough buyers to push through 20. But again, a lot of accumulation in the tight channel for a while. So it means something. We're also accumulating, and the impulse will happen one way or another. We might break to the upside and touch the 22.5 at least, or we break down and go to the free fall. Everything is possible. And Ethereum is having a hard time moving higher here. It's also really sticking to this very tight range over here. So we'll be watching what's next in cryptos. Okay, so again, just to wrap it up, it's very simple. The equity markets are moving lower due to everything fundamentally, geopolitically, financially, the actions of central banks, especially the Feds, fighting to bring the inflation lower. So that it's still in play and will be for a while. We have war. I'm not going to go into it again. That affects everything. And we have NFPs, which is the key point for this week. The NFPs, that's one of the strong aspects that the Feds are paying attention to in their decision as far as interest rate decision and monetary policies. And we have interest rate decisions from New Zealand and Australia, which will be affecting the recent moves in those currencies. I want to thank you all for coming again for our webinars. Enjoy the weekend. Get ready, get some rest, get some energy. It's going to be a very interesting week. I wish you all the best. Take care. We'll be back next week.